Hello and a warm welcome to the Open Treasury podcast, your go-to source for the latest news and analysis in corporate cash and treasury management. This show is brought to you by CTMfile.com and the Treasury News Network, where treasury professionals learn and share the information that matters most. I am your host Pushpendra Mehta. Joining me today is Jack Large, editor of CTMfile. Thank you ever so much, Jack, for taking the time to share your perspectives with us on topics that impact the world of treasury management and beyond. Let's dig deeper and get your thoughts on our topics for today, namely Bank of England's hefty rate hike, the IMF developing a platform for central bank digital currencies, UK's high-value payment systems, and ISO 20022, and Bank of America joins one of the world's largest sustainable aviation programs. Our audience can read articles, interviews, and industry roundups by visiting ctmfile.com or by following the links in our show notes. Let's start with our discussion. Our first story for today is about UK raising its main interest rate from 4.5% to 5%, the highest since 2008 and its largest increase since February following stickier inflation. While a 0.25% increase was expected by some analysts, the bank's 9-member Monetary Policy Committee, or MPC, who set official UK borrowing costs, opted for a 0.5% rise to 5%. Market participants now believe that the Bank of England Governor Andrew Bailey and the rest of the MPC will continue raising UK rates in the second half of 2023 and will have raised a likely peak to 6%. By contrast, Indonesia, the 10th largest economy, left its interest rates unchanged at 5.75 for a fifth consecutive meeting, and many expect no change for the rest of the year. Jack, from a corporate treasury perspective, is the UK hefty rate hike concerning?
Yes, but what's really concerning is the dynamics of the UK economy. Brexit is now having a long-term impact. We have built-in drivers for inflation, and we also have a pretty static MPC who have traditional ways of looking at things rather than taking a different approach like Indonesia and like Morocco, where they have said they won't, and there are two or three other countries as well, where they say they won't increase the interest rate. I think we are stuck with where we are. I think the problem is going to go into the fact that a lot of people are now driven into a corner to fund their mortgages, which is really concerning, and the government is not looking to help much. I think in terms of a corporate treasury, I think the thing that corporate treasurers need to take into account is that each country is different, and you're going to have to manage your corporate treasury depending on where you are in the world, where you operate from. This is a feature that's becoming more and more pronounced, and something that corporate treasurers are going to have to get an increasing grip on.
You mentioned borrowing costs. Do you think that this is going to adversely impact borrowing costs and or liquidity for the rest of the year going into 2024 as well?
Oh, yes. The problem is that the BMC have said that this isn't the last rate hike. They've got more planned. But the problem, again, from corporate treasury point of view, is that the infrastructure in the UK is rather prone to external forces, and I don't see it improving anytime soon.
You don't see it improving anytime soon. Our next news topic is about the International Monetary Fund, developing a platform for central bank digital currencies or CBDCs to enable transactions between countries, according to its managing director. The IMF believes that CBDCs should not be fragmented national propositions, and to have more efficient transactions, we need systems that connect countries, which means we need interoperability. For this reason, the IMF is working on the concept of a global CBDC platform. 114 countries, 114 in number, representing over 95% of the global GDP, are exploring a CBDC. Keeping this in mind, Jack, do you think treasurers and CFOs would welcome IMF's plan to develop a global CBDC platform?
Yes, I think so, because the blockchain, Bitcoin rather, has had erratic price rises and drops and so on. But corporate treasurers are going to have to work out where they are going to fit the CBDCs around the world into their collection of funds and actually paying people, because it's going to be used both ways. And this is early stages, but it's definitely coming. The other important thing, and I think it needs underlining, is that the IMF have said that these cryptocurrencies need to be backed by assets. Adding cryptocurrencies without asset backing is unstable, as they call it, a speculative investment. And I think that's what they're going to bring to cryptocurrencies, is some form of stability in terms of backing the currencies. However, it's going to take a long while before we sort this out, because the models theoretically look the same, but they're actually very different. The ones in the West Indies are different from the ones in China, and the IMF's got its work cut out to manage this. But corporate treasurers can't go asleep. This is coming. How are you going to manage this?
That's a very good question. How are you going to manage this? Can I ask you one more question? You mentioned the fact that corporate treasurers and CFOs would be watching this news very carefully. While interoperability is a very important issue for countries like the UK and US that have been a little slow in getting onto the CBDC race, do you think the fact that IMF intends launching this global CBDC platform will get UK and US moving to adopting CBDCs or introducing them faster than they would have expected? And where do you think privacy and security will fit into this?
That's a really good question. And for example, the Chinese CBDC actually doesn't have anonymity. You can track who made the payment. It goes back to an account. That type of thing, managing the privacy issue, managing the extreme excesses of cryptocurrencies, is going to become more and more important. I mean, the group of corporate treasurers I used to work with, they are all very cautious. But having said that, it's not going to go away. It's a matter of how you manage it. And again, it's going to be country by country, because the models are different.
The models are different, and that's really worth thinking about. Let's move forward to our third story for today that merits discussion, which is about UK's high-value payment system, CHAPS, migrating to the ISO 20022 messaging standard. This marks a significant milestone in the multi-year program to renew the bank's real-time gross settlement service, a program whose objectives are to increase resilience, competition, and innovation within the payments landscape, a Bank of England release stated. Jack, how will corporate treasurers in the UK stand to benefit from CHAPS migration to ISO 20022?
The key difference is that ISO 20022 has additional payment information, and it can go as far as having live contracts in the actual payment. This is going to need managing, but again, ISO 20022 is coming in all payment systems across the world. SWIFT is driving this, and we're going to see more and more of this. The issue for corporate treasurers in CHAPS is, for example, is what additional information do I add? How do I manage this information? How do I manage the database of the information behind the payments? Because all of a sudden, payment systems databases are going to become huge because they have so much more information. It's going to be a very difficult change, but it's one that I think CHAPS users, if they can take advantage of it, it'll be very important.
I remember, Jack, in one of the earlier podcasts, you mentioned a very important statement that payments is possibly going to become the centerpiece of treasury going into the future. These may not be the exact words, but this is what I got from that conversation. And that statement actually, to my mind, seems very powerful. Given the fact that now you have the high value payment system in the UK migrating to ISO 20022, do you think the entire business of payments is going to get a big boost?
A very slow but continuing boost. The changes in the payment systems inside corporates and banks is going to take time. The infrastructure is now starting to be put in place. CHAPS moving to ISO 20022 is just one example. It's happening around the world. The question for corporate treasurers is, how do I make use of this information, extra information? How do I evolve how we do payments? The key thing about payments is it needs to be stable, guaranteed payment. So similarly, the information needs to be stable, useful, and correct information. It's going to take a while, but I think it's a very important development. And as I say, it's happening around the world.
That is a very interesting perspective, Jack. Moving forward to the fourth story for today, which is about American Express Global Business Travel and Shell Aviation announcing that Bank of America is the first financial institution to join their Sustainable Aviation Fuel program. The program launched in 2022 with 1 million gallons of sustainable aviation fuel for corporate customers is enough to power almost 15,000 business trips from London to New York. Jack, this story caught my attention, and for somebody like you who believes in ESG and sustainability, I could not help but ask this question: that is sustainable aviation fuel, or SAF, one of the aviation industry's most promising pathways to decarbonizing air travel, and does this augur well for corporate treasury and finance in the aviation industry?
Now, the problem is that this is such a huge change. I mean, this article talks about 2 to 8 times increased costs powering the plane to fly to New York or wherever. Not only that you have to change the planes as well. I think this is important, and American Express are to be congratulated, as are Bank of America, are continuing to push the sustainable programs or responsible financing, as they put it. I think this is very important. However, what we're going to have to do is accept not just that we use this sustainable fuel, but that we may make less trips to and from countries. The number of flights has gone down for some business meetings because they no longer need to. They can use Zoom or other equivalents. But the actual discipline of cutting down face-to-face meetings is going to take a while. Corporate treasurers have an important responsibility here, because in a way they actually specify the conditions by which payments are made, and so they can have an enormous impact. Okay, Amex have got, 19,000 customers in 140 countries. But the issue is not the coverage, it's making the discipline to actually cut your spending and your number of trips. It's going to be an interesting dynamic because this is absolutely essential. I mean, we've got a heat wave in several of the oceans around the world, when the UK is looking at having a heat wave in the seas around us. And some of the pessimistic forecasts are talking about millions of fish being killed because it's just too hot for them. We have to do something. The issue is, how do we do it? This is just an example, but corporate treasurers have to take responsibility, have to be primary driver in getting this new type of approach.
That is a very insightful analysis, Jack, and I hope our audience was listening to your words very carefully. Finally, Jack, what is your choice for the biggest or most important story of the past week, and why?
It's a theme that has occurred in four of these 4 items, but it also has occurred in many of the coverage over the last week in CTMfile. It's that corporate treasury needs to be done on a continuing basis of tweaking things country by country. The issue is first setting your framework, your drivers, and then dealing with it issue by issue, country by country. That's what is coming out for me this week, is the importance of a global strategy with per country frameworks and solutions.
A big thank you to you, Jack, for your discerning perspectives and opinion. We would also like to thank our CTMfile audience for joining us on this edition of Open Treasury. Please subscribe and look in the show notes for the article links. Thank you. This podcast is provided for information purposes only, and statements made by CTMfile or guests on this podcast are not intended as legal, business, or consulting advice. For more information, visit ctmfile.com.